only XRP and Bitcoin have regulatory clarity on status in the U.S.
We're up here to talk about something that I think we all wish had happened a long time ago, which is T1, and I thought you should explain because it means a lot to our viewers without them knowing it.
Look, this is a really good thing. If you sell your stock on a Monday, you will get your cash on a Tuesday. That's the easiest way to think about it. And in the past, just a week or so ago, it took 2 days. If you sold your stock on a Monday, you got it Wednesday. So we worked at the Securities and Exchange Commission on a rule to shorten that settlement cycle because today's technology allows that. But here's the interesting thing. We're just back to where we were in the 1920s. There was actually, if you sold your stock on a Monday in the 1920s, you got your cash on a Tuesday. And because of everything going on, they lengthened it all the way to a week, and we've had to slow walk it back. But everybody worked well together. The stock exchanges, the custodians, the clearinghouses, and this thing works smoothly. Mexico and Canada, Argentina, Jamaica all joined us. I'm really proud of the work of the SEC, but it was a collaboration across industry.
And NVIDIA created me. Very easily it created me. It created my voice, created my face. Basically.
So are you human or are you just artificial intelligence?
We wonder sometimes.
David, am I human or am
It's unclear. You may be a simulation.
I'm a dollar sign represented by a man.
That we know.
Yes, Mr. Musk once said I was a simulation, so I can't be sure. But what I think is interesting is that you are very worried about AI and the power of it. And
I think that artificial intelligence is the most transformative technology of our time. And I talked about the 1920s. Then it was the automobile, electrification of the whole economy. But now we're taking human decision-making and more putting it in the box, in the algorithm. So I think that's transformative. It's a good thing for capital markets, but it also raises real risks of conflicts. What if the algorithm is, in essence, trading against you? Risk of fraud. What if the algorithm is trying to defraud you or mislead you? And also risk, if we're all reliant on one or two models, then the whole capital markets might basically, drive off the cliff together. And
but you're aware of that, and you can protect us.
Jim, fraud is fraud, and so somebody shouldn't be doing fraud. But these are more difficult challenges, more real challenges, and the conflicts are real too. Okay. So hypothetical because you're describing things that are in the public domain, and the public is interested in. So, but generally speaking, you have to make sure that you don't mislead the public and that you don't in any way do things in the markets that may be manipulative or misleading. And so that's the key thing in our capital markets.
No, the key thing is if you can cure it with disclosure. This is Brandeis. You know if they disclose that this is something that a call to action, then you can't go after them.
Disclosure is one really key part of our capital markets. When you buy the stock of a company, you expect that they give you full and fair disclosure. That's, by the way, not what you're getting right now in this crypto field. So I just, cautionary tale there. That disclosure. But disclosure doesn't necessarily protect a bad actor if they're manipulating a market. You can't just simply disclose that away, particularly if you're misleading the public.
Not cured. Disclosure not cured. Very good.
Public markets are broken. That we have 7 companies that represent 30+%, for example, of the market cap. That we have far fewer public companies than we did 10 or 20 years ago. I'm curious how you think about that and whether you agree or disagree with those who would argue that the public markets don't work the way they should.
Look, I believe deeply in competition, and we in the U.S. benefit from very large capital markets, which are 5 times our banking system. $23 trillion banking system, $110+ trillion capital markets. Not Europe, not Asia. That competition. But I also believe in competition between public markets and private markets. Maybe it's because my dad had a small business of 30 people. Maybe it's because I did work at Goldman Sachs that when I was there, and Jim, you were there.
Yeah.
Yeah. Yeah. You were on a different floor.
No,
at
I
the
wasn't on
time.
a different floor. I was on a better floor, higher paid.
Don't lose track here. Don't lose track.
Sorry,
But
lost-
I really
lost
do think that public and private can compete with each other and benefit the American public. The key is to make sure that there's standard rules, that people get the proper disclosure if you're investing in something, that basic bargain. They get full and complete information on material aspects of the companies, but also that the capital markets, like this here, are operating free of fraud and manipulation.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And they waited a whole week to go over T+1. And we have Gary Gensler. Yes, the chess piece that's kicking this regulation can on down the road. And why was it taking so long to settle? Because we know the banks are the biggest what? I'll let you finish that. But in my NWO book, I went over all the fraud that was going on during these settlement days. And then, of course, we have T+0. But because they have an algorithm, of course, this algorithm can move money around. And if you go to the masses, they have no clue that a T1 has occurred. But we have Jim Cramer always talking about the machines. And we know the machines are going to rise in this fourth industrial revolution. But we have 7 companies that represent 30% of the stock market cap. And that is absolutely ridiculous, but you can say the same thing for cryptos. The reason why? Because it's controlled. You have a few companies that own everything, and they hide behind names. The illusion of choice. And we have Gary Gensler still sticking to his stance. Crypto now is a field of non-disclosure. And we've had lawsuits, fraud, people going to jail. But remember, guys, it was all a movie. None of it is real. Gary Gensler taught blockchain and crypto at MIT and now acting like he never did. Guys, I'm telling you, you're in a movie. You can go and look at the clips. And he's even talking about the banks, how the banks have a monopoly over the whole system. And now Bitcoin and crypto is a scam. Guys, you can't make this stuff up. Just like I stated, you can go on YouTube right now and he's explaining everything and giving you the use cases. And this is why the NWO stays in control, because the masses are asleep. If they understood finances, guys, none of this would work. And then we have Ripple XRP stablecoin on its way. And we know these stable coins are just going to be attached to CBDCs to keep the central banks in control. And she states that Bitcoin and XRP are the only ones that have regulatory clarity. But as we know, XRP and XLM are going to rise in the emerging markets. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
We have in the U.S. already a way that you can invest in various underlying securities and underlying commodities called exchange-traded products. In January, we approved an exchange-traded product on Bitcoin. And about a week and a half ago, similar filings to list on the New York Stock Exchange, list on NASDAQ and the like, exchange-traded products on Ethereum. Ethereum had been traded on the Chicago Mercantile Exchange futures for 3+ years, and the staff looked at that closely, and that was approved. Now, the underlying exchange-traded products still need to go through a process to have the disclosure about that, and that will take some time, but they're working on that right now.
How about congressional trading?
Well, look, everybody in the markets, 330 million Americans, should understand that you have to play by the rules of our capital markets. And one of those things is that when you trade, you don't trade on what's called inside information from a company that it's not made disclosed to everybody else. But the same rules apply.
Information is in Congress.
Well, historically, that has happened in the past.
Okay, now, Polkadot, Cordana, Cosmos, Immutable, Ronin, Bonk, Osmosis, Sushi Swap, my neighbor Alice have all traded millions. I'm talking about millions of dollars this very morning. Now, should we have a Sushi Swap with maybe an ETF or the proprietary kind? Just I would think that Bonk is a natural and Osmosis. These are trading Gary, these are millions of dollars. These things are trading. Shouldn't we have it? Shouldn't we have some sort of product?
Let me say something more broadly about the crypto markets. Right now, without prejudging anyone, these tokens, whether they're the ones Jim listed or other tokens, have not given you the disclosures that you not only need to make your investment decisions, but also that are required by the law. It's a basic concept in our securities market. We, the SEC, tomorrow are turning 90. Happy birthday, SEC, 90. And what President Roosevelt did is he created this commission to oversee that you, the investors, get disclosure. And in the crypto markets, they aren't giving you that disclosure. And secondly, that exchanges, like here, this floor of the New York Stock Exchange, get properly regulated to protect against fraud and manipulation, and they don't trade against you. And these crypto exchanges, Jim, are doing things we would never allow this New York Stock Exchange to do. Our laws don't allow you to trade against your customers. And so you've seen the bankruptcies in this space. And there are some of the most leading lights in this field are either in jail, about to go to jail, or waiting extradition.
Okay, well, it's a suboptimal situation for them, but I'm looking at the...
But it's a suboptimal situation for investors. You're investing in a field right now that you're not getting the proper disclosure.
I agree, there's securities for people actually I know. I mean, their names. And there's nothing... You know that, too.
No, that's funny, yeah.
I mean, some people even in this room have their names attached to a coin for no reason. Makes no sense.
I'm sorry, you guys have coins?
No, we don't.
There's a Kramer coin?
There should be, but there isn't.
Yes, there is a Kramer coin.
I hope it's properly registered.
Well, I wasn't going to bring it up because now it's a pump and dump. Wow, Kramer coin. I was not going to bring it up, but there you go.
Chair
now,
Gensler, wait. We have only a little bit of time
the
left.
SEC versus Ripple Labs.
Right, Dave, what do you want to ask?
There you go. I've got the floor.
Thanks.
Your overlords. Do you have overlords? Are you totally independent? And here's where I'm going with this. I can't understand sometimes Gary Gensler. He knows about crypto. He was at MIT. I wouldn't say he was 180, but he certainly got. It seemed like he changed a little bit on what he thought about Bitcoin, what he thought about crypto in general. And then you look at certain individuals, Senator Elizabeth Warren. Take your pick. On maybe on either side of the aisle, I guess. It seems like more on the left are against crypto. And it even, Russ, I dare say, some of the bad actors, it wasn't about crypto itself. If you had a more open mind about crypto, you could have had maybe some regulations or legislations that prevented the bad actors. But because he had this default that all crypto was bad in the first place, where did that come from? Did that come from the administration? Did you hear similar things?
No, I mean, look, I can't speak for what others in the administration are saying or thinking, but, you take these jobs, you have huge responsibility. You have a lens into markets that very few people do, right? Whether it's traditional derivatives, physical commodities, financial futures.
Do you agree with Gensler's view?
No,
you have the same lens. Do you agree with it?
My opinion should not be driven by what I think or what I like or what I dislike. It's what my responsibility is as a regulator and what we observe in markets. So again, we have this legal framework that defines commodities a certain way. We have these tokens that, the way they're constructed, fall within the commodity definition of the existing law. And we've seen these markets emerge. They've grown, they've scaled, they've gone up and down, but we've seen sustained interest by retail investors. We've seen sustained interest by institutional investors. Right. And right now, unfortunately, we've seen sustained enforcement actions. And that's my problem, right? My number one responsibility is to protect investors, to protect the American economy. And when we see continued manipulation and fraud in this market, when half of my enforcement docket is crypto in an area that I don't have traditional regulatory tools, that is, in my mind, a huge red flag and something that I need to speak up. And I engage with Congress. You use the phrase overlords. I have authorizing committees in the House and the Senate. I have appropriators in the House and the Senate. I have to report to them. I have to tell them what I'm seeing. I have to tell them what I need from a budget perspective. And I have to tell them what my recommendation to them is regarding writing law and where the law needs to be changed.
We all have overlords.
We all have overlords.
You see projections of this market reaching about $3 trillion within the next 4 to 5 years. And I think that's for a few reasons. One is just demand to hold U.S. dollars, easy access to U.S. dollars in various parts of the world. Two, for payments, which has been the core of our business for many years. So the reason we're entering this market is we see demand from our customers, financial institutions of various types, who want to use blockchain for more efficient global payments and want to do it using a U.S. dollar stable.